math has officially stopped making sense. While the mainstream headlines have you focused on the latest political theater, the global ledger is being rewritten in real time.
Guys, let's get right into the numbers because the newest jobs report just came out a couple of days ago and it shocked a lot of people. Stay tuned in this video because I'm going to give you exactly what you should be doing right now to prepare for what I think is coming. Okay. Now, based on the latest jobs report, the U.S. economy actually lost about 92,000 jobs in February when all the experts were expecting job gains. Because think about it. Last month, we gained a bunch of new jobs. So that's like the total opposite just 1 month later. Now, with this latest jobs report that we just got on Friday, the unemployment rate also rose to 4.4%, which is up from 4.3% the previous month. And here's something else to think about, okay? Private payrolls went down, which basically means that businesses are starting to slow down their hiring. Several sectors showed weakness as well, including the manufacturing jobs, construction jobs, and even parts of healthcare jobs are showing a slowdown, right? Now, this matters because for the past several years, guys, the labor market has been the strongest part of the U.S. economy on the surface, right? If people have jobs, people typically spend money. And if people spend money, businesses grow. But when this hiring slows down, economists and investors start watching things more closely. And to be super clear, guys, what makes this latest job report so just flat out strange, okay, is just 30 days ago, the economy added roughly 130,000 jobs. Who is being truthful and who isn't? Can we rely on these jobs reports or not? This is why I say something strange is happening with these jobs reports because it flipped in just 1 month. My question is, what's really going on here? Are we adding jobs or are we losing a bunch of jobs? So in my opinion, what we're really seeing right now is we're seeing a labor market that's looking halfway decent on the surface, but it's got some problems underneath the surface. It's really slowing down.
This isn't just a number on a screen. It's a systemic fuse.
Total filings, we've got 40,534 properties with default notices. There's 3 phases to foreclosure. The default notice is filed, the auction is scheduled, and then the property is repossessed. The 3 phases of foreclosure. Okay, so we've got 40,000 properties somewhere in one of these 3 filings, phases, stages. They in there somewhere, okay? That's where they are. So this is up 32% from last January.
We've got some major moves happening in the crypto market. PayPal expands its stablecoin to nearly 70 countries. Also, MasterCard to acquire BVNK in a deal worth up to $1.8 billion.
Now, news outlets across the world are reporting that the conflict has already forced producers in the region to reduce shipments, which has taken millions of barrels of oil per day off of the global market. And when supply suddenly disappears, prices move very quickly. Some benchmarks for crude oil have already climbed above the $100, like I said, and just now spiking well past it, with analysts warning that the move could continue if the situation worsens. Several major financial institutions are now weighing in on this situation. Goldman Sachs recently warned that oil prices could remain above the $100 level if shipping disruptions through the Strait of Hormuz continue for an extended period. Other analysts say that the market is now adding what they call a geopolitical risk premium to oil prices. In other words, traders are pricing in the possibility that supply could fall even further. And this is important because oil affects almost everything in the global economy. This is very important. See, when energy prices rise, transportation becomes more expensive. Shipping costs go up. So many other things go up, like airlines facing higher fuel bills, manufacturing costs start to increase, and eventually those higher costs filter into consumer prices. Economists are already warning that if oil remains above $100 for a sustained period, it could push inflation higher around the world and slow economic growth. Markets are reacting to that possibility right now as we speak. Some global stock indexes have already started to pull back as investors worry about the economic impact of rising energy costs. And at the same time, energy companies are seeing strong gains because higher oil prices can dramatically increase profits for the producers. Another interesting point that analysts are discussing is the current price spike may not actually be driven by demand. Of course not. In fact, some forecasts earlier this year expected oil to stay closer to $60 per barrel because supply was projected to exceed demand and the economy is slowing down. Unemployment is rising. People have less money because of inflation that we've had for years to spend money going on vacations and things like that. You see, this surge is being driven primarily because of the global disruption of the Iran-US war. This is going to get more serious, and you have to remember that we are coming into the springtime where seasonally the price of oil rises already. Get ready for tighter issues. Now, this presents an incredible opportunity for most people, and if you're ready for it, you can go and crush it. That's why
I can't break down the real-time whale movements and global news wires here. That's why we launched the terminal. For $1, you get the same 24/7 intel wire I'm looking at. Raw feeds, institutional crypto alerts, and macro data before the media spins it. The first 100 spots are open at the founder's rate. Link is in the description.
Alright guys, welcome back to your Doomsday Report. The Iran war is about to set off one of the biggest threats to the global economy today. And if you think the risk to US stocks is over, it's about to get nasty the longer things drag on. It's so crazy, I don't even have time to shave. I'm beginning to look like a homeless person. And over the last few days, we saw global markets sell off. And the worst hit were industrial economies in Asia that were heavily dependent on energy imports. Now, many countries buy oil and gas from the Middle East to run their industries. Now, South Korea is a great example, and their markets fell so hard, it fell so fast, they had to activate the circuit breakers. And until today, there's no indication that the war in Iran is going to end. We have so many conflicting reports that just sound ridiculous. The New York Times is saying that Iran made a secret outreach to the US waving the white flag, but how true is that? Meanwhile, with Hegseth telling the world that the US is just getting started, we could expect bigger and heavier hits coming from the American Navy.
More and larger waves are coming. We are just getting started. We are accelerating, not decelerating. Iran's capabilities are evaporating by the hour, while American strength grows fiercer, smarter, and utterly dominant. More bombers and more fighters are arriving just today.
Now, does this sound like escalation or de-escalation? Sounds like Trump and friends are just getting started, which means the Iranians are going to squeeze the global oil markets even further. Now, the Strait of Hormuz is effectively paralyzed. Saudi and Qatari supply of oil and gas are compromised. So now the world is facing a shortage of 20% of global energy consumption. We cannot overstate how important Middle East supply is to the world. Together, they supply nearly 15%.
Layoffs, and I'll put it up on the screen too. I'm on Warren Tracker, WARNTRACKER, warrentracker.com. Pennsylvania, that whole northeast, I'm trying to correlate foreclosures to layoffs, right? Pennsylvania, I'm only looking at 2026 numbers. It is only March 1st. We've only had 2 months in 2026. Pennsylvania has laid off 4,483 people already, first 2 months. New Jersey, which is, what number was New Jersey on our list? New Jersey was number 8 on our list. New Jersey has laid off 7,008 people in the last 60 days. Maryland, 1,387. Connecticut, 1,525 layoffs. Y'all, it's no choice but to have some kind of effect on housing, right? You lose your job that you used to pay your mortgage. You know what I mean? So watch that. Georgia had 2,558 layoffs in the first 60 days. Texas, 3,300. California has already laid off 12,000 people in the first 60 days of 2026. No choice but to have an effect on our housing. That's what I'm saying. If you are looking to buy a house, I mean, your job is looking kind of shaky, I would just hold what you got, or I would think about renting. And you never hear a real estate agent talk about renting, do you? But I'm just saying, now if you're in a house and you can afford it, just hold tight, right? You just ride the wave. If you are a seller thinking about selling right now, I know y'all are waiting on this spring rush, right? Y'all hoping and praying for a spring rush. I don't know if you're gonna get it.